What's up you guys, Tomy Shaw here. In today's channel what I'll be doing is, are we in a bull trap? Okay, first of all, what is a bull trap? Okay, it's when, let's look at the Dow Jones here for a second, and over time Dow Jones evolves, the price ranges every single day, it evolves, it shows a chart. And the beginning of 2020 Dow Jones was almost $30,000. Now it's around $20,000. It's gone up a little bit, as it feels like you don't really know where it's going. It's trading between a range, and there's like three situations that can happen right now. So the first one is, are investors catching a falling knife? Is this a falling knife? Because a falling knife, usually it goes down very quickly and then it goes back up and then it goes down very quickly. So you could go down to maybe 10,000, 15,000, nobody knows how far it could fall. The second situation, traveling in the range. And the third situation is that it recovers, it gains everything that it just lost. It lost about 33%, and now it recovers, goes back up within 1 year. A lot of investors right now who are telling you to buy are thinking the third situation will become a reality. Okay, before entering the markets, you have to have the right mindset. Timing the market is very hard. You have to have a mindset of an investor. What is a mindset of an investor? You need to think long term. Okay, so before entering your trade, what you should consider, what you should think about before entering that trade is that, do you need that money within the next 6 to 12 months? Because with everything that's going on right now, maybe you're gonna need your money. All right? Because if hyperinflation happens, inflation or the consumer goods start to increase in price, maybe you're gonna need a lot more money than you think. All right? Sorry about that. The second situation, the second question that you should be asking yourself is that, can you manage the loss? Do you have the psychology to manage entering a trade and within the next few months losing 50%? Is your psyche able to handle that? That is it's the question concerning risk. Do you think that you're buying a great price? Okay, you need to look at the value of something. When you're buying something, you can't use anchoring to say, oh yeah, it used to be $30,000, now it's 20, now it's 10,000, but you don't know the real value, the real fundamental value of that stock. So always enter the market with the perspective of looking at value and not only the price, because prices can be tricky. When you go into somewhere where you think prices are going to be low and you're expecting a $4 price and you see it at $10, your brain says that's expensive. Why is it doing that? That's called mental anchoring. You're price anchoring something, but you don't really know the value. All right? So the three situations that can happen are investors catching a falling knife, traveling within a range, which you don't really make money, you don't lose money, and it just stays about the same, or a V-shaped recovery. A lot of people are hoping for the second situation, but you need to think about what's going on right now. Even if government intervened with this situation by pumping a lot of money, the fundamentals behind the market don't make sense. Within the next 6 months to 4 months, there's no income coming into this business except for Walmart, Costco, Dollarama, like the business that are still functioning. So, and at the same time, it's kind of funny to see that the businesses that run right now are businesses that are large cap, and the federal bank is going to invest in large caps. They're going to buy ETFs within the large cap sector. All right, so before entering, always consider this before buying. Like, just think about it. Do you need the money within the next few months? If you do need the money, don't invest. Can you manage that loss? Can you manage psychologically, or can you handle losing 50% of your portfolio? If you can't do it, don't invest. Do you think that you're buying at a great price? Do you have more value than price? All right, so that's that for today's video. Hopefully you got some value out of this. Or maybe I just add one little quick point, is dollar average your cost, okay? If you're not too sure what you're doing, well, put every single month an amount. Let's say it's you want to invest, I don't know, let's say $5,000 this year. Just divide it by 12 and invest every single month. And your bet, if the market still goes down, you could buy at a cheaper price. And if the market goes up and it goes back down, you could average that cost during your time that you're investing. All right, so that's it for today's video. If you like this kind of information, leave a thumbs up, subscribe, and I'll be seeing you on the next video. Thank you.